It's good to have the three of you up here. We've had pretty good series of presentations from all our business leaders. So maybe I'll just kick off with the first question.
Maybe just Marilyn, quickly before we go into that. I think we just want to start first just with a round of applause for all the business leaders, A, for coming in, and B, for the great presentations today. So thank you all very much. I think first and foremost, obviously, we do want to thank everyone for coming and obviously joining virtually as well, and really hope that everyone enjoyed today's sessions. I think the content that was provided, I think the visibility into the business, hopefully really brings the ESR story together very well for everyone. I think what was also on display today is certainly the depth of talent across the organization. This is a really unique platform that's been able to bring together, we think, the pioneers, founders, and some of the most seasoned executives in our industry in Asia. And I think that was on full display today. I think, before we get into the questions that we'll finish with, I think as we heard at the outset today and through maybe some of the presentations throughout, is clearly this is a tougher operating environment that we're all in today. This is, for all intents and purposes, the fastest rate of increase in interest rates that probably anyone in their business life has lived through. And I think at the same time, we're probably out of the world of free money. Now, the reality with that is that we think that's a good thing, because as Josh highlighted, this is really where capital partners and investors will turn to experts like ourselves to generate that alpha. And when money isn't free, I think that competitive dynamic changes considerably. You heard it from teams in Korea. You heard it from even in China, the opportunity set that's ahead on that front. And I think despite that challenging market, I think we continue to be very well positioned. Strong balance sheet combined with very, very healthy banking partners and relationships, certainly with the Japan credit rating. The AA- investment grade rating positions us to really tap into other new capital sources as well on the financing side. High visibility on capital recycling will continue to further reinforce the balance sheet in 2023. And as you heard from Josh, very good traction on fundraising, which will likely continue to be more back-end loaded in the year as obviously rates come more into focus. Investors increasingly move from high level of interest into action as we close a number of those vehicles. And, I think in general, when you look beyond the immediate term and you look out onto the horizon, I think when you look across these new growing areas of the group, obviously beyond the dominance in logistics, but the growing data center business, the growing areas in infra and renewables, and then more infra-like projects that have a big synergistic logistics component, as we heard from Darren and Trent and John and the team with what Logos is doing and what they're looking to replicate across the business, I think really positions us very, very well for the longer term. So as we said before, this is really for the investors to give them an opportunity to really see firsthand the depth, as we said, of talent, the ingenuity that goes into the business every day, and most importantly, what we see is the bright prospects ahead. So maybe with that, I'll turn it back to Marilyn for the final Q&A.
Okay. Thank you, Chairman. So just a few questions have come in. Maybe, we'll just kickstart with the first one, given that, we've just gone through all the very powerful and strong presentations. So after walking through all the markets in APAC, which are the ones which you feel that will continue to perform more strongly, and then which are the ones where you feel you're most worried about?
Yeah, maybe to start, and then I'll turn it over to Jeffrey and Stuart. I mean, look, certainly, and I think the China team gave an excellent presentation today, and I think, one clear takeaway, which I'm sure many of you had from it, is, China is not a V-shaped recovery, and I think we've been clear about that at the outset. Josh also highlighted some of the challenges in terms of North American and European capital as it relates to China. But at the same time, that's also being counterbalanced by reduced rates and cost of borrowing in China, substantial domestic interest in the market, and obviously other sources of capital that's going to continue to be interested in the market. So I think long term, we're actually, we continue to be very positive. Obviously, short term, as we've highlighted and you heard from both leasing, hopefully that continues to pick up in the second half of the year. But that's probably one market, obviously, that is in a slightly different position than a few others. I think as you turn to certainly Japan and Australia and Korea, each of them have their own nuances, but we think, again, the market backdrop is very favorable to a large player like ourselves in the market. But maybe Stuart or Jeffrey, if you guys want to add anything.
Sure, I think each of the market have its advantage and a disadvantage time to time. I mean, the key is, how our local management team, to focus on our strengths. For example, like Jeff mentioned in China, and we are still watching the consumer, how the consumer coming back. But on the other side, the local RMB currency are very active. We did a few deals, and you can see some of the sectors like the EV, the life science are booming, in China. So the key is, how we put every element together and try to balance time to time.
Yeah, I would say there's a lot more positives than negatives out there in the markets that we operate in. If you look around Southeast Asia right now, they're definitely getting the benefit of the China Plus One. Myself and Jeffrey have spent quite a bit of time in Southeast Asia recently, and it's manifest. We can see it in Vietnam, we can see it in Thailand, we can see it in Indonesia. So, there may be some headwinds in China which are given domestic issues potentially, but the upside of that is the other markets we are operating in are great beneficiaries of that. So as we kind of hop around the markets, there's definitely a lot more positives out there. Even in advanced countries, economies like Japan, you're starting to see the return of high-tech manufacturing. That mostly left Japan back in the 80s and 90s, but you're starting to see it onshoring again. So actually, I would say there's none of the markets that give us any particular heartburn, but different markets have got their own idiosyncrasies, and there's a lot of good stuff going on out there despite the macroeconomic headwinds that we all talk about.
Okay, thank you for that. So now I think we should take the second question on going back to the earlier question on integration. So I think we have communicated that ERA has already been integrated into ESR, and maybe we can have gentlemen give a little bit more color in terms of the progress for the rest of the business.
No, sure. So I think as you highlighted, Marilyn, obviously the ARA piece is obviously the integration's been fully completed. We've crystallized, obviously, the cost synergies we had highlighted, in fact, obviously exceeding those targets. As we've talked about at our year-end full year results, in terms of Logos, we've obviously looked at it in stages. And so obviously select markets where we felt it was the right answer, we obviously integrated initially. Singapore bringing the REITs together, and obviously the development business, Indonesia and China. In terms of obviously key back office functions, as Josh highlighted, as we've done both with ARA and Logos, the ability to bring all of those capital raising resources under one umbrella, speaking through one voice, and engaging with all of our investors across a range of products has been very advantageous for us. And it's certainly helped, I think, in achieving nearly 30% of the capital raised last year coming from new investors to the group. Additionally, other back office functions, health and safety, insurance, and others have also been brought up to the broader group, including several Logos professionals leading those efforts. Next up, obviously, we're going to continue the integration discussions, obviously led by John and Trent on the Logos side, Stuart and Jeffrey and the broader team on the ESR group side. As we think about, obviously, the next set of markets, obviously with the final aspect of the integration being completed, obviously in time for the, call it end of December, January 2025 roll-up. So I think that continues to be very constructive, continues to remain on track. And as we've seen it from a co-branded perspective with the PAC-V that Josh talked about, the co-branded Core Plus vehicle, the size and scale of that offering is incredibly powerful. And if you add, obviously, and take a market even just like Australia, between the substantial projects that obviously Phil and the team have put together and the same on the Logos side, you're talking about just nearly $20 billion of AUM alone in Australia, with arguably the largest development pipeline in the market. So it's certainly very exciting, and we look forward to continuing to update the group as we move forward.
Okay, we have a question on REITs. So which markets do you think you can add additional REITs in, and what can we do to also improve our existing REITs?
I guess just on the REIT side, I think you obviously heard it from the team, from Reihua and the team, obviously around the upcoming C-REIT in China. That's obviously a logistics asset, a set of assets. We think obviously China has the opportunity to be a huge market, likely the largest REIT market at some point in the world, certainly the largest in Asia, likely in the nearer term. And so beyond logistics, obviously, as we grow life sciences portfolios and high-tech industrial portfolios, business parks, there's obviously opportunities to have parallel REITs across these other areas. So that will continue to be a big focus. I think beyond that, you heard from Japan, obviously, the potential migration of the P-REIT, the private REIT, eventually into a publicly listed J-REIT in the market. And then obviously we have a number of other opportunities as we think about Australia, as well as certain markets in Southeast Asia, which are earlier in their evolution of their REITs, but ultimately, as they advance their own legislation, we would be uniquely positioned, obviously, given the portfolio we have. So I'd say that's probably in the most immediate time frame. And obviously, last but not least, as that data center portfolio grows across the group, as those assets stabilize and mature, that's obviously another unique opportunity, either for a Pan-Asia vehicle or ultimately on the single country side.
Okay, and then in terms of existing REITs, maybe a little bit more color on, say, ESR Logos REIT?
Yeah, so I think, this is a vehicle we have, certainly a flagship vehicle for the group. We continue to remain very, very focused on it. And I think, the team from ESR Logos REIT has been very clear to the market in terms of its continued asset rejuvenation strategy, selling the non-core assets and ultimately replacing that with the high quality new stock that the group has produced, which you've heard obviously across our markets, the caliber and the quality of those new assets. And so we think there's an ability to continue to enhance that quality. And if you boil it down, our point of view is very simple with REITs: quality, quality, quality. Quality will win the day. And that'll help those vehicles trade at premiums to net asset value. Obviously, as you trade at premiums to net asset value, that opens up a window for that to be a growing vehicle. And so we've talked about the size of the pipeline available to ESR Logos REIT. So I think the continued execution of that, we've continued to bring down the gearing of the REIT, so it's now really well positioned for continued growth.
Okay. I identify with this question. What keeps you up most at night?
I mean, I have 2 kids under the age of 5, so maybe I'll turn this over to Stuart or Jeffrey for maybe a better answer.
Well, recently it's been Top Gun, Avatar, and the new Elvis movie, because I tend to do an inordinate amount of red-eye flights. So I tend to not sleep that much and just watch in-flight movies. But seriously, I mean, the thing that keeps me awake is the same thing that keeps every other real asset fund manager, every fund manager globally awake. It's the macroeconomic stuff. You worry about the stuff you can't control. You don't worry so much about the stuff you can control. Stuff you can control, you can come up with a plan for. You can focus on it and you can execute on that. The stuff that's in our control, we do very, very well, actually. It's the stuff we don't control. I mean, there's always going to be the white elephant in the room. You know, there's where the share price is right now. I'm sure that's a question that's going to come up. But, you know, the Hong Kong Stock Exchange is down 37, 38% in the last 2 years. There's obviously going to be a coefficient between that and where we are, because we are on the Hong Kong Stock Exchange. So again, you know, there's just some things that you worry about that you can't control, but the stuff that we do control, that doesn't keep me awake. So it's the bigger macroeconomic things.
I mean, first, I'm sleep quite well in the night, during the night. But yeah, I mean, the what keep me thinking. I mean, it's time to time, right? The different times I'm thinking different. But I think for recently, one is I think how to. I mean, based on the large integration and how we have the more efficient of the capital using, and how we sell the non-core business, as Jeff mentioned, and convert it to our core business. And then is all the China stuff. I mean, the leasing, development, I mean, the series, and as we mentioned, I mean, in the presentations. And the third one is, I think we have a great team, but key is how we bring more synergy between the teams and in the geographical business.
Okay, thank you. There's one other question. To unlock value, would ESR consider listing its Australian business?
Look, very good question. I think, each and every day, obviously, management and ultimately, obviously, at the board level, we're always assessing different ways to maximize value for long-term value for shareholders. We've obviously done a range of things on that front, from obviously share buybacks to commencing a dividend, which Stuart had highlighted earlier, to obviously streamlining and simplifying the business through some non-core divestments, and obviously looking to continue to invest in areas of growth. So I think delivering long-term sustainable value is top of mind, and where there's opportunities to enhance that through other channels, we're certainly going to turn over every stone on that front.
Okay, I think that will be the questions that we have.
Well, look, I think just to conclude here, again, we appreciate everyone's attendance today and for giving so much of their time, obviously, for this Investor Day. As we talked about before, we do believe we've got certainly the right talent in the organization to continue to drive long-term growth for the business. Certainly, we continue to remain disappointed with the share price. That goes without saying. But at the end of the day, it's about delivering performance. And I think hopefully across the range of business units that everyone had a chance to hear from today, you can see it firsthand in terms of the long-term power of the platform. So maybe with that, we'll pause there and look forward to seeing hopefully many of you at our annual meeting annual general meeting in Hong Kong next month. Thank you.